Hello everyone and welcome to Candriam's Coffee Break. Today we'll take a closer look at how strong political momentum, trade policy shifts and macroeconomic signals are driving markets and guiding our investment decisions. Today we navigate through a market shaped by seemingly irresistible forces. At the heart of it is the US political momentum. Washington's new trade regime is reshaping global flows, with tariff revenues already surpassing last year's total. As the chart shows, these revenues are now helping to fund the ambitious One Big Beautiful Bill Act, a multi-trillion-dollar stimulus package. This backdrop has coincided with a weakening of the US dollar, enhancing export competitiveness, and a continued decline in oil prices, driven by higher OPEC plus production and recent diplomatic visits to the Gulf. Combined with market expectations of a dovish monetary policy stance and solid earnings prospects, these developments are currently fueling broad-based market gains. Let's now dive into global equities. We maintain a neutral stance across all regions, including the US, EMU, Europe, ex-EMU, Japan, and emerging markets. While the overall allocation remains unchanged, we focus tactically on sectors such as technology, AI, German midcaps, and European industrials. These offer stronger earnings momentum and greater political clarity than US cyclicals, which appear priced for an overly optimistic scenario. Moving on to bonds, our view remains positive. In Europe, we are slightly long on sovereign duration, with a preference for core Europe and investment-grade credit. We remain underweight on high yield. In the US, our stance is neutral across treasuries and corporate credit. In emerging markets, we continue to diversify through debt in both hard and local currencies, supported by positive real yields and a weakening US dollar. Now to currencies, our positioning stays neutral on EUR and GBP, slightly underweight on USD and positive on Japanese yen. We also maintain selective long positions in emerging market currencies where real rates and fundamentals are supportive. Thank you very much for your attention. We will continue to monitor these events and adjust our strategies as necessary.